to risk. Sign up today.
The following is a presentation of TFNN. The Trader's Edge with Steve Rhodes. Call now, toll free at 1-877-927-6648 or internationally at 727-873-7618. The Trader's Edge. Now, Steve Rhodes.
Good afternoon, folks. Welcome to the October 14th, I believe it is. Yeah, it's the October 14th, the wonderful Wednesday edition of today's Trader's Edge show. I'm your host, Stevie Perseverance Rhodes, who absolutely knows that each of us should always be pioneers of our future versus prisoners of our past. Hope everyone out there is having a great day. Hey, let's make sure we have an extraordinary one. And the easiest way to do that is to always remember that life is happening for us, not to us. That's right. When you and I make that one little 2x4 shift, it means we can find the gift in every set of circumstance that life is going to toss at us. Now, today, you and I, we'll go check on the circumstance of these markets. We'll go figure out what those bulls and bears, what those buyers and sellers are communicating to you and I just past 1 o'clock in the afternoon. I want you to know that I'm absolutely grateful for your presence here. And much more important than that, during this next 60 minutes, I'm here to serve you. So feel free to pick up that phone. You can dial on in, 877-927-6648. If you can't dial in, we've got you covered there too. You can always let those fingers do the walking. You can send me an email, steve@tfnn.com. Inside that subject heading, please put radio show question, of course, in our Tiger's Den. Well, any ping will do. So let's go ahead and get this show started on wonderful Wednesday. Of course, this is Tiger Financial News Network. I'm Steve Rhodes. Welcome to Les Show. All the indices trading lower, with the exception being the transports up 159 points, 1 3/10% to the upside. Dow's up 106, S&P 20, NASDAQ down 124, Russell off 4. Semis are off 14. New York Stock Exchange on 25. Wilshire off 208 points out there. Sounds big. It's only about a 0.6%. Spot volatility is trading right around the 50-day exponential moving average. It's trading out at 26.69. Gold's up $12. Silver's up 30 cents. Light sweet crude is up 63 pennies out here. Lead the charge dollar-wise. The upside, it's Tesla up $12. And Transdigm Group up nearly 12. Baidu up 11. Pool Corp up 9. The Trade Desk up 8. To the downside, Amazon off 84, Booking Holdings down 37, Mercado Libre off 37, Shopify 27, Twilio down 17. So we certainly have things to look at, but we're going to look at what you want to look at. Let's first just begin by just look at the short-term time frame charts out here. So let's take a look at the short-term time frame charts, just see if there's any signals. Well, I'm not really even looking at the charts here. I guess, as you know, I've got a number of different tools. Here's just a quick scanner, just for you and I, only you and I, your eyes only. Just to take a look at looking for some Rhodes Momentum Indicator signals out here. And I've got this for the 30, 60, 120, 240, and 5 hours. So there's our intraday signals. You can see that the ES Mini and the Dow on their 30-minute time frame are attempting to form bottom patterns with the Rhodes Momentum Indicator. If you go over to the larger time frames, we've got top confirmations out there. So just short term. So we know what to go take a look at, and that would be the ES and the YM. Not that we can't look at the others, but we're looking at those to see if they generate any kind of bottoming pattern. So let's take a look, begin with the ES Mini. In the ES Mini, let me just update this chart here. We can see price moving lower, doing less relative energy. That is what triggers that Rhodes Momentum Indicator signal. And automatically gets drawn with moves down diagonally. Now we can see that the first one formed out here at 7 o'clock this morning. That was confirmed with a bullish engulfing candle. What price then did was it ran up into its resistance level. Didn't get all the way up there. 32.5475 is the number. Market moves lower. By the way, that was another lower high out there. So not a great situation. We do not have a bearish reversal candle yet. Doesn't mean that it can't bottom, won't bottom. Price made its way down to its breakout level, which is the 34.83. We're still trading below that. If it can get back above there, price should target 34.93 to 34.96. That's the bottom of that current profile. We get a bullish reversal candle. That would confirm a bottom. Doesn't have that just yet, but something to be watching. It is in bar number 7 of a TD9 count out here, so that's another potential pattern, but that couldn't form for over an hour and a half. The Russell, not the Russell, the Dow was the other indice that on a short-term basis had that Rhodes Momentum Indicator signal out here. And we can see that it really did the same thing this morning as well. The first Rhodes Momentum Indicator signal fired off, generated that bullish reversal candle. Here, price got all the way up to its breakdown level. That's 28,698. Take a look at that 28,698 level out here. This is the candle from 10:30 in the morning. Looks like it's 10:30 in the morning yesterday. You see that candle? There's no human possible way. Well, I guess there's a way, but there's no way. I would take every single technician here at TFNN, probably every single technician listening in the den right now, every single technician that's listening in on YouTube channel, every single technician listening on an archive. And what I would say is I guarantee you that no one, unless you're using a TD9 count, would have come up with 28,698 as a resistance level. Now, look how important understanding that is. If you take a look at the rally that we saw overnight into 5 o'clock this morning out here, where did price stop? Right there where price broke down. A beautiful tool out there. I want you to learn how to use this tool. I want you to learn it. I want you to master it. I want you to pass it on to your kids and their kids and keep things going. Because these markets are always going to be trading in this pattern. These patterns, they stand the test of time. Well, hey, back to the rodeo here. Rodeo. Hey, Rhodesio out there. We do have wave number 7, letter G. So now you actually have a confirmed bottom signal pattern inside, and this happened at 12:30 out here. So you've got well, you know what? That's after so we do have that. No confirmed Rhodes Momentum Indicator signal. In this case here, it looks like prices head up to about 28,513 or so, Stevie's red line. Anything above that, you should see price move into the 28,596. Now, we don't have other participants, meaning there's no uniform bottom out here inside the equity futures contract, and that always makes it a bit iffy out here. If I take a look at, in other words, saying that, hey, you got that pattern and that's going to identify a bottom. Now, in the case of the Russell 2000, what this has done, this moved back to where it formed that butterfly buy pattern. Yesterday or the day before, you can see that pattern drawn in here. So prices come back to a level of support. It has tested Stevie's red line support up at the 1632 level. Maybe the Russell 2000 equity future contract for its 30-minute time frame is what you'd be watching. If price closed above 1633.80 on a 30-minute time frame basis, that would be bullish and suggest a further run higher. But right now, this little counter trend rally, we can see where support is. The support there from the prior day, that support still exists out here. If you can bust through that means a close below 1622.70. Then price inside the Russell 2000 would head to its breakout level, and that next breakout level is at the 1617 area out here. Well, as long as we've done the first three, we might as well do the last one. That would be the NQ. Take a look at its 30-minute chart, its 30-minute time frame out here. Get a feel for what it's communicating to us. In this case here, we can see an A to B equals CD to the downside. This would be a Gartley buy pattern that could be forming. In order for it to form, what we need to see a bullish reversal candle, and we don't have that just yet out here. So very similar to the ES and the YM, in that they're waiting for a confirmed bullish reversal candle to confirm the Rhodes Momentum Indicator signal. Here you're looking for the NQ. If it does the same, generates a bullish reversal candle, that would confirm a Gartley buy pattern. That's what's going on in our short-term time frame charts. We'll take a look at the questions that have come in here, and we'll figure out what to talk about next as soon as we get back from this break. I'd love to hear from you at 877-927-6648.
If you're not currently using the TAS Profile Scanner when looking at setting up your trading opportunities, then your arsenal is short a mighty weapon. The TAS Profile Scanner is a standalone piece of software that instantly filters over 2,500 global financial markets such as stocks, ETFs, commodity futures, and Forex. Headed by Steve Dahl, TAS understands that in today's technological world, the use of top-flight software applications and technical analysis expertise is essential to successful trading in today's market. You also gain access to the webinar that Steve Dahl and Tom O'Brien just hosted, The Best Way to Use the TAS Profile Scanner to Profit. This webinar archive is available for all subscribers immediately upon signing up. All new subscriptions also come with a 30-day money-back guarantee, so you have nothing to risk. Start your subscription by visiting the front page of TFNN.com today, and you'll find the TAS Profile Scanner under the Services tab. Sign up today. Are you in the market for buying or selling real estate in the Bay Area, including the surrounding St. Petersburg, Tampa, and Clearwater markets? Tiger Real Estate LLC is a firm that has extensive experience in the Tampa Bay area. Whether you're looking to sell your current property for maximum value, or you're in the market for a second home or investment property, Tiger Realty has the experience across all areas of real estate in the Tampa Bay area to help buyers and sellers make the most informed decisions across all price levels. From the price you should be paying per square foot in certain up-and-coming areas to the type of cash flow investment properties are capable of creating, Tiger Real Estate can help you make the best decision when it comes to all areas of the market. Before you make one of the biggest decisions of your financial future, call Tiger Real Estate LLC today at 727-329-8322 or email us at tiger@tfnn.com. That's 727-329-8322. Call us today.
Many of our new listeners have heard about The Tiger's Den. The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of the TFNN shows, plus see all of the charts as they happen live and have access to archives of all of those charts. You can test drive The Tiger's Den absolutely free for 30 days and greatly enrich your knowledge of these markets and how to make your money work for you. Details on The Tiger's Den are on the front page of TFNN.com.
TFNN has launched our brand new website. You can still visit us at the same TFNN.com URL, but when you do, you'll see a new and improved homepage with a much simpler navigation, whether you're watching Tiger TV live in high definition or just accessing your newsletter subscriptions. We even have new pricing in 6 months and yearly options. Check out the new TFNN.com now and experience all the upgrades. TFNN.com, educating investors.
Call now, toll free at 1-877-927-6648. Internationally at 727-873-7618.
Welcome back, folks. Dow is off 107, S&P 20 points out here. Let's go to our first question. Our first question coming in from Ian Miller from my big fat Greek wedding. It's not Ian Miller, but it is Ian. And Ian says, hey, Steve, I just wanted to know how you feel about the markets long term. Has anything changed? And, of course, when Ian's asking how I feel, he's really asking me to interpret the charts out there and the patterns, and that's what we'll do. So I'm not going to give you my personal opinion. I'm going to narrate the charts for you and explain what it is I believe that those charts are signaling to us, but it has nothing to do with my feelings here. My view, now this is Ian saying it, so it's Ian. My view, this is Ian's view, is we'll get another stimulus package next week. It will be a top, and then the market will sell off until we get clarity on the election, looking for a November low. Am I out to lunch on this? Let me do this. So I shared with the folks out there your view of this. Let's go take a look at the charts, at least what I'm looking at out here, and what they mean. So with regard to changing the view, there's nothing that has. So let's begin this way. Because you're really asking big picture stuff. And if we're going to take a look at big picture stuff, we need to look at the big picture. So what's the big picture? First, I always like to take a look at we can't think in terms of just us. And I know that Ian is not doing that. I definitely know that Ian is not doing that. You and I have to keep in perspective what is going on around the globe. Now, we especially have to understand that because if things are going great around the globe and there's some market around the globe that's going gangbusters, that's a potential for where money or large capital may be fleeing, the global flow of capital. So if we see that, that's something that you and I have got to take into consideration here. So let's see how our market's doing worldwide. This here is our 9-panel chart. In the upper left, you've got the Dow Diamonds. The Dow Diamonds still are trading below the 2019 high. That's at 288.63. We were above it yesterday or the day before, I believe. We closed above. We're back down below it. It's acted as resistance. So the very first thing we know about so first, with regard to global capital, because we're really kind of putting this into the scenario here. What you need to understand is that global flow of capital is looking for large caps. They're looking for the Dow. It is the trophy horse. Why is it the trophy horse? Why is that where the capital will flow to? It's easy to get in and easy to get out. It has tremendous liquidity. So that's the reason why we've got the Dow Diamonds up here versus the Qs or the SPY as an example next to. And so in its case here, an instrument, any instrument, I don't care what it is you're trading. If you want to understand if there's some type of breakout going on, this is especially helpful in the early part of the year. Price has got to get above the prior year's high. If you don't get above the prior year's high out there and you close below that prior year's high, go look at the charts and see what that might signal to you. Well, what it does signal to you is a potential pullback. Now, that's important out here because the other element inside the Dow Diamonds chart out there is we haven't even taken out the 2020 highs, the most recent 2020 highs as well. But the 2019, that's most important at this stage of the game. If you take a look at right next to that, the UK. The UK topped back in 2014. It's still in a descending trend line. There's no global flow of capital that is focusing itself in the UK based upon our EWU chart. If we take a look at what's going on in Australia, same kind of thing. Below the 2019 high, it's got descending trend lines. The same thing when we take a look at Canada. Canada's top, most people don't know this, but you realize the top in Canada is still back in 2007. And take a look at that descending trend line. So do you think that global flow of capital is saying, boo, I've got all kinds of confidence in Canada, Canada, the loony bin? No, I'm just kidding. The only country south of Detroit. No, I'm just kidding. Hey, take a look at China. Now, China is trading above its all-time highs. It's trading above the 2019 highs. Is the global flow of capital going to China, or is China's market more manipulated? I don't know the answer to that. I'll go with the latter more likely than believing that the global flow of capital is headed its way to China at this stage of the game, but that's a possibility. Take a look at India. India is trading into its descending trend line. It's still below the 2019 high. Nothing breaking out there. If you take a look at Germany, it's trading right now. It closed at 1 penny above its 2019 high, which is 29.89, 29.90. Is the number out here. If we take a look at Japan below the 2019 high, you take a look at the emerging markets here, price trading really right on that. So what we have globally here, at least with regard to these 9 markets that we're looking at, Ian, is we don't see, the only breakout is China. And if you want to go put your money in China, I'm suggesting to you that this breakout that we're seeing, it's not being confirmed that this is where the global flow of capital is going. So has anything changed globally? I think the answer is no. In just simply looking at this chart, just simply understanding the 2019 high and where price is trading. Now that's going to make the end of the year Dow chart really important. If I bring that over right now, which I will, no signals or anything that are on it, but here's the yearly Dow chart out here. As you can see, we haven't had a year like this ever. This wide of a range in the year from high to low, so you're already familiar with that. But here's the key. This is a key reversal bar as we speak right now. A key reversal bar requires 3 elements. The first element is that the current bar, the high and low, needs to exceed the high and low of the prior bar. Okay, that's been accomplished. The second thing, you've got to be in an extended condition. Well, we can call this an extended condition. There's no doubt about that. We're up at all-time highs. We can see the bull run since 2009 out here. It's an extended condition. We could draw an A to B equals CD pattern. But the third element, and this is key, and this is the thing I can't answer right now, Ian, nor can anyone else out here, but where's the Dow going to close at the end of the year? If it's 1 tick below the open, that then generates a key reversal bar. Now, I can't show it to you on this chart, but I'm going to go get to the historical charts out here. And if we get an annual key reversal bar, I believe the last one that we had was 1973. That's my recollection, but maybe it's 1937. No, it's got 73. It's got to be 73. So let's go back and take a look at it. Where was that key reversal bar? I said it was 73. Was it 73? Yeah, right here, 1973. So there's your key reversal bar, led to your typical 2-year decline. Your 2-year decline, your 2-bar decline out there. Wouldn't matter whether it's months, whether it's weeks, whether it's days out there. The other key reversal bar that we had out here was in 1966. So here's another key reversal bar. And what we just had in that instance here, Ian, was just simply capped the markets for quite a while. It generated a consolidation signal out here. Well, if you go to where we're at right now, even though this chart here isn't updated, there'll have to be one heck of a large consolidation out there. So the yearly bar, Ian, is something that we won't know until we may know before that, right? Because if the market sells off and it's well before the open of the year out here, then we'll have that information. But as we speak right now, on October the 14th, I think today's the 14th out here, it's a guess. It's a wild, you figure out the guess, a wag. And it could be a swag, a silly. And I'm not going to give you what happens if we close one tick to the upside. Ain't a key reversal bar. Remember, you got to have 3 elements out there, and therefore, then you can potentially have some kind of a breakout going on. So that's the first step. Even though I haven't answered your question yet, and we're going to a hard break, it at least creates the preface. It at least creates.
I joined the Hotel California in 2006, and like many of you, was drawn in by, as well as.
Whatever you think about, you bring about. Whatever you focus on grows.
You see, I believe that everything in life happens for us, not to us. And Tom ignited the fire within me to want to learn how to master the markets. So how did I go from knowing nothing about technical analysis to becoming the #1 market timer for the S&P 500 in 2018 and the #2 market timer in 2019? Simply put, I hired coaches with a proven track record, which led me to a whole new set of tools that I created to interpret the message of buyers and sellers. I would love the opportunity to teach you this award-winning set of tools and to help you improve your market timing. You can test drive my newsletter service, Mastering Probabilities, for the next 30 days with no risk to you. Plus, you'll gain access to archive workshops that'll take you step by step through my system. Sign up today by going to the homepage of TFNN.com and selecting Mastering Probability in the newsletter tab.
If you're a trader in the market looking to find the path that leads to maximizing profits while decreasing risk, then now is a great time to try out Dave White's daily trading service, The Path of Least Resistance. Through the use of options and equity trades, Dave advises his subscribers on a daily basis of the current market conditions and what possible trade setups are on the horizon. The Path of Least Resistance is published every trading morning, often with updates intraday when initiating trades or closing out positions. Dave White has advised his clients of some outstanding winning options and equity trades in recent months, and now is a great time to try it out for yourself. New subscribers to the Path of Least Resistance receive a 30-day money-back guarantee. See for yourself the types of options and equity trades that are available by signing up for the Path of Least Resistance today by visiting the front page of TFNN.com and selecting the newsletter tab. Sign up today. TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABC's, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com.
This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Welcome back, folks. Sorry about that. I ran a little bit through the breakout there, but basically was just simply saying that we've laid the foundation here by taking a look at globally what's going on, because we have to think globally. If I just sit here and spend all my hour focused on the U.S. Stock charts out here, it's going to do you a disservice. I'm not interested in doing you a disservice out here. So, Ian, if the Dow finishes lower, we already know we've got the potential for that key reversal bar out here. I would have to say that the idea that the market makes a bottom in November and then moves higher, you're saying the elections when all that gets figured out. I'd say that based on typically key reversal charts out there, I'd say that's not the case. That, in fact, what more likely is the case that we have lower lows coming in for the next year or two out there. So that'd be 2021 and 2022. So that's what the charts would be communicating to you. But we don't know if we're going to get there or not. We don't know if we're going to have that key reversal. If we just take a look at the U.S., okay, so we move over from understanding globally what's going on. We take a look at what's going on in our markets here. We're going to see that inside the Dow, the upper left, you can see the descending trend from the February 2020 high, the September high, and even the high that's coming now. So potential that we're here at a top. We'll go take a look at some TAS market profiles that would give us the confirmation of that. We don't have the confirmation just yet, but it is something to consider out here. The S&P has made it back towards that September high, September 2nd high. If it doesn't take that out, you got a lower high out there. There's a pattern that I know one of our denners just absolutely loves to trade, foams at the mouth, doesn't foam at the mouth, but loves to see that pattern out here. Well, we got the same pattern inside the NDX 100 right now, the same thing in the Russell, which topped back in August of 2018 out here. You can see the January 17 high inside the New York Stock Exchange and descending trend line. So the only thing, the fly in the financial ointment, not that there's a fly here or there's financial ointment, so I don't really know what that sentence means, although I do like to say it. It sounds like I'm intellectually smart, but maybe just to me. So the old fly out here in that index ointment is a semiconductor index. It is breaking out. It's above its 2019 highs. It's above the September high that it had in 2020 out here. So does the semiconductor index need to top in order for everything else to fall? Something to think about. And definitely something to think about. Okay, so we've got this established out here. The next question would be, as bad as things seem across the globe, right? There's probably nobody going to raise their hand and say things are going great, with the exception of the people in Sweden. Those people are loving life, and they're not wearing masks. They are loving life out there. They got the old herd immunity, same thing that we're going to do here by vaccinating everybody or by letting everybody catch COVID, and however that works out. But not even, just kind of staying, just staying within the charts here. Sorry about that, folks. It just spills out. Whoa, shoot! It spills out. Where am I going with this? So so things are crap across the globe, right? But the idea is, where is it that's the least crap, right? Because that is where money might say, hey, I've got some confidence. So as bad as things maybe seem like they are here in the old US of A, well, this might be the least place. So we've got to look for global capital flows. Now, as we speak right now, because that would be the thing, Ian, that would say, you know what, I don't care about technical patterns. When money decides that it needs to park itself and move somewhere, and it decides that move place happens to be here in the USA, then it won't really care about patterns for the most part, or it'll note those patterns for a day or two and just say, sayonara, adios, I'm out of here. Well, if we take a look at, this is the last 14 days, it's actually 15 days now. So give me a moment here just to adjust this, just so that we are looking at dead on balls accurate information out here. Now, this is just simply the rate of change in these instruments since the September 24th bottom. Now, you might be asking, that would be a good question. Why in the heck, Steve-O, did you choose September 24th? Now, that's a great question. So to answer that question, I'm going to show you the Dow chart out here. And the Dow chart completed a Gartley buy pattern. So let's go take a look at it. And that Gartley buy pattern on the 24th is, oh, geez, did I just do that? Okay, good. I didn't delete it. There we go. So here you can see the Gartley buy pattern. And you can see that you can see an A to B equals CD pattern to the upside. Remember, the Dow itself at this stage here has not generated a bearish reversal candle, so it has not confirmed its Gartley sell pattern, whereas the Dow equity futures contract has. We covered that a bit earlier out there. But that's the reason to use, though, September 24th, because that's the most recent bottom out here. And the question is, do we see any kind of global flow of capital coming into the U.S.? Right, that is the question. Yes, Sweden. And if we take a look at the Dow equity future contract, and I've got the ES Mini out here, well, guess what we have? These, so far, percentage-wise, since September 24th, they have been the leader. The only thing that has something equivalent would be emerging markets out there, and so I don't think I would much prefer to see emerging markets not be anywhere near the return, the rate of change that we're seeing inside the Dow or the S&P. But if we watch it closely, there still is the potential out there, the potential that maybe capital is starting to flow here. Well, how are we going to know that, Steve? You've just gone through a heck of a lot of stuff. You confused the heck out of me. How are we going to know? Would you cut to the chase already? Okay, I'll cut to the chase already. Here's the chase. Now that you've got all that in perspective, we know that the Dow equity future contract has generated a Gartley sell pattern. So what else do we know? We know that the Dow equity future contract is attempting to form a new profile. That is panel number 2 from the right, 3 from the left out here. Now, this profile has changed 3 times now. So do I have confidence that this is the final profile? No. And subscribers out there, the NQ has formed a profile where it hadn't this morning. At the time that we sent the newsletter out, it now has generated a new one. But hey, remember this morning, the Dow's equity future contract, that was a bullish structured profile. And it was small. Now it's big. So this is dangerous. This is dangerous out here. So if this profile takes hold, and I won't know if it does until sometime this evening, I would think. But right now, we've got to go with what we've got to go with, and that's the numbers. And the numbers here are resistance at 28,846 and resistance at 28,451. That's the center. When you close below, I don't know where it will close today. If the Dow equity future contract closes below the center of its profile out there, 28,451, because it's bearish in structure, what typically plays out, it doesn't play out overnight. It can play out overnight, but it doesn't typically play out overnight, is a push down to support. That would be 27,662. Get to the point already, Steve-O. Well, that was one of the points I wanted to make. Here's the point. If you see the Dow equity future contract close below the bottom of its daily profile, that's a good indication that there's a change in trend out here. But now it's really large. Whereas this morning it was going to be nice, right now it's not. So what can we do with this information here? Well, and here's the contrast. Here's the problem, Ian Miller out here from my big fat Greek wedding out there. The problem is you've got a brand new profile that's attempting to form in the NQ out here, and it is below price. And that is as bullish as you can get in profile land out here. I don't refer to it as a bullish structured profile. So that's a bullish signal. So you got potential bearish signal in the Dow, potential bullish signal in the NQ. How are you going to resolve that? That's what I pose to you. Hey, you don't have to resolve it. I don't have to resolve it. We can let the market resolve itself for us. What we're going to focus on probably today at the end of today's trading session is the ES Mini. Its profile still intact from this morning. 3456 is the bottom of its bullish structured profile. If the ES Mini closes below that, that may be the signal that the markets are getting ready to move lower out there. But right now, nothing broken just yet. Steve Rhodes with TFNN. We'll be right back.
Many of our new listeners have heard about the Tiger's Den. The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of the TFNN shows, plus see all of the charts as they happen live and have access to archives of all of those charts. You can test drive the Tiger's Den absolutely free for 30 days and greatly enrich your knowledge of these markets and how to make your money work for you. Details on the Tiger's Den are on the front page of TFNN.com.
TFNN has launched our brand new website. You can still visit us at the same TFNN.com URL, but when you do, you'll see a new and improved homepage with a much simpler navigation, whether you're watching Tiger TV live in high definition or just accessing your newsletter subscriptions. We even have new pricing in 6 months and yearly options. Check out the new TFNN.com now and experience all the upgrades. TFNN.com, educating investors.
If you haven't checked out the newsletters page of TFNN.com, what are you waiting for? All of the TFNN newsletters are informative, up-to-date, affordable, and a must-have for every trader looking to gain a competitive informational edge in today's markets. TFNN newsletters cover every aspect of the markets to offer you the very latest in market news. Plus, new subscribers get to test drive our newsletters risk-free for 30 days. From all aspects of the markets, including stocks, bonds, metals, commodities, and tech, there's a newsletter to fit your needs exclusively from TFNN. Stay informed each day you trade and get that competitive edge that will help you stay ahead of the game. Visit our newsletters page by going to TFNN.com and click the newsletters button near the top of the page. TFNN.com, educating investors.
Biotech is booming, but for how long? Whether you think the biotech bull has room to run or has run its course, trade LABU or LABD. Directions Daily S&P Biotech 3 times bull and bear ETFs. Visit directioninvestments.com/biotech today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction shares. To obtain a prospectus or summary prospectus, please contact Direction shares at 866-476-7523. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foresight Fund Services, LLC.
Don't forget, you can listen to TFNN live on your mobile device 24 hours per day. Go to TFNN.com, then hit Watch Tiger TV. That's TFNN.com, then hit Watch Tiger TV for the latest market information.
Welcome back, folks. Dow down 160, S&P off 26 out there. So, Ian, I hope that helps you out with regard to, didn't really, we got to take this stuff one step at a time. One step at a time, and that's why we use these, understanding these key levels of support and resistance. They will assist us, and also understanding history. That'll help us. So that's why we took a look at those yearly charts and understanding where are the global markets out there. So speaking of global market out here, John in the Tiger's Den asked the question, is the Nikkei poised to break out here? So let's go take a look at the Nikkei. Closed last night at 23,626, above Stevie's green line. When you close above Stevie's green line, that's a positive. Tells you about a rising price oscillator above zero, and that is bullish. Now, what we also know with regard to the Nikkei, John, is that there's significant resistance on, this is the daily time frame, at 23,910.01. and 23,908.85. Both of those are TD9 breakout areas. So is it poised to move higher? The answer is yes. Can it take out 23,910.01? I don't know if it can or it can't. But what we do know is that is resistance. And that resistance level has proven itself. If you take a look at the Nikkei, going back here into the January-February timeframe, forms a TD9 count bottom, does it on bar number 8. Price runs right up into that TD9 breakdown level. That was 23,910 out there. And then it forms another TD9 count out here on that decline. Remember, the bar following bar number 9 can be the bottom. That very next day, price gaps down and takes that out. You've heard me say when you don't even have a hiccup or a sideways move or anything, it tells you about a strong momentum move. That's exactly what transpired. And then when it did bottom, it was with a TD9 count bottom back in March out there. So that's how that tool works. We don't have a TD9 count or anything like that. But if you're asking me, is the Nikkei going to move higher? The chart, the daily time frame says the answer is yes. But 23,910, don't know whether we'll clear that level. If we take a look at a weekly time frame chart, John asked, can we look at the weekly out here? And we take a look at the weekly. The weekly says you've got resistance at 24,108. So you've got daily TD9 breakdown resistance. You have monthly TD9 breakdown resistance. This becomes your range as to where price is going to run into. Now, John, if price can close over those levels, then that tells you about a change in trend out there. Now, of course, somebody's going to look at this and say, change in trend, Steve-O, a little bit late considering it formed a TD9 count bottom way back there in April on the weekly time frame. So you had on the weekly and on the daily. Nikkei was giving you the message. You can see the results out here. But this is trading above its oscillator and change line. To come up with the weekly, John, I've just got a red line. It's not going to change colors out here. It's just above that. So you're above the daily, you're above the weekly. Yeah, it wants to move higher into those resistance levels out here. We can go take it back even further. Why don't we do it? Let's go take a look at the monthly time frame chart. So what do we got going on inside the monthly time frame chart? The monthly time frame chart as well says that price wants to move higher. As far as resistance, it's just the 2018 high. I was at 2018, the October 2018 high that it has to contend with, 24,448.07. But in answering your question, the answer is yes. It does look like the Nikkei wants to continue to move higher. Now, the Nikkei has got a signal that says it wants to move higher out there. The Hang Seng, just to show you how this tool works out here. Now, this doesn't have today's data in it, and I'm not going to refresh the chart out here, but I know where the where the Hang Seng closed and was below 24,713. So here we can see an A to B equals CD to the downside, a Gartley buy pattern that actually formed out here with this bull sash candle. It did have a TD9 count, but it wasn't a valid bottoming signal. That's okay. It generated the buy, the D point. What does price do? Runs all the way up and creates a TD9 count right into that resistance level of 24,713. That's why those resistance levels are so important. It's why I could answer John's question with regard to, it's going to move higher. But now because we had that TD9 tool out here, we knew where that resistance was, that breakdown resistance was. So the Hang Seng signal is it wants to move lower. The Nikkei is signaling it wants to move higher. Markets over in Europe, we take a look at the FTSE and where it closed and what it did out here. Really been trading sideways, just pulled back and tested Stevie's red line. So it's not providing us with any indication other than price moving back to support. The DAX doing the same thing out here, although the DAX is testing Stevie's green line. Remember, the green line is bullish out here. So with regard to European markets, they haven't fallen apart or anything along those lines with regard to the patterns that they're in and their overnight trading. So I hope that helps you out, and thanks for the question. Justin writes in, and just in time, before we go to our next breakout here. No, Justin writes in, he says, wondering if we could talk about silver today. So it says it closed below my red line yesterday. So let's go take a look at high-ho silver. And you're short. Okay, so let's take a look at silver. So with regard to silver out here, let's pull over the daily time frame. And on this daily time frame chart, what silver did yesterday was it confirmed a Gartley sell pattern. So I've got the A to B equals CD pattern drawn in. You see about 25.83 was its price target. Didn't get right up to it, but it got close enough. And what it did here, Justin, was it generated a three-river evening star. That's your bearish reversal candle. Now, yesterday it did close below Stevie's red line, but the more important thing about yesterday, not that wasn't important, it was, but the more important thing was it created that confirmed Gartley sell pattern. Now, what you'd like to see today is price continue to close below Stevie's red line. We're trading on it right now at 24.41 out here. This is a signal that price is likely headed to 22.95 next, then 21.73, and perhaps 19.80. In fact, maybe this is setting up an A to B equals CD to the downside. If you take a look at that, Gartley patterns have 5 different outcomes. The first first 3 are retracements. The fourth one is 100% move out here, and then the fifth one is that it creates a new A to B equals CD to the downside. Whether this is going to happen or not, we won't know unless price gets below the B point of that pattern. That would be the 21.73 area. But right now on the daily time frame, you've got a confirmed sell signal, and that suggests that you stay with your short position. If we take a look at the weekly time frame says, hey, I already have a sell the D point. That was confirmed with that dark cloud cover, then reconfirmed with the bearish engulfing candle. The rally that we've seen here this week took price right up into Stevie's green line and rejected it, meaning it's closed below it at 25.61. So this is another indication that you should stay with that position. If price closes above 25.61, we might have something else to say about that. But right now, I'm giving you the read as of 1:49 in the afternoon. So that's what the daily and the weekly time frame charts are communicating to you. If we take a look at the 30-minute time frame chart out here, I've got nada, zip, zilch, not a whole lot to offer you. So let me see. What else did you ask? You're asking about time You know, what's it look like 2 to 3 weeks out? There's no, I don't have that I don't have that skill set. I don't have that ability. I wish I did. I don't even know where I would go to get that ability out here. But what we do know is the numbers. We know the numbers and the patterns. And if we just simply respect those, because they are helping to signal you and I what the intention of the market is, I think that you'll do just fine. Now, you also asked if I could go take a look at the dollar and the euro. So that we can do. So if we take a look at the U.S. dollar index, I've got about a 10 or 15-minute delay on it. But right now, it's trading out at 93.36. So this formed a TD9 count bottom out here. And it did it 3 trading sessions ago. And not until that low gets taken out will it get bearish, so to speak. So you've got a valid bottom signal, but it's really neutral right now because price is below Stevie's red line, and it's red, and the support of that TD9 count. So the U.S. dollar index is neutral. And Justin, when we get back to this break, we'll go take a look at the euro. Be right back.
With markets trading with extreme volatility and peaks and troughs everywhere, regardless of what you're looking at in the markets, this is a great time to see the type of analysis Basil Chapman delivers for his subscribers every market day with the Opening Call newsletter. Basil has been analyzing markets, providing his take for subscribers to his trading services since 1984. Every morning, Basil publishes an update for his subscribers, along with weekend and evening updates when warranted. The Opening Call provides traders a daily market overview with regard to the direction of the key indices, selective stocks, and commodities, along with specific recommendations, including stops and targets. You also gain instant access to Basil's subscriber webinar archive from earlier this year, a dark cloud cover, and essential market analysis. Ride the Chapman wave today by signing up for the Opening Call newsletter on the front page of TFNN.com under the newsletter tab. New subscribers get a 30-day money-back guarantee, so you have nothing to risk. Sign up today.
The gold market has taken off topside in a large way in 2020. If you want to take advantage of this sector, now is the time to subscribe to my gold report. The gold report took profits in 4 of its equities in the gold portfolio in the first week of January for a combined profit of 99.2%, with 2 positions left in the portfolio that have a profit of 67.5% as of January 7th. The Gold Report is a comprehensive look at the metals sector as well as the markets that move gold, which is the currency and bond markets. New subscribers get a 30-day money-back guarantee, so you have nothing to lose. Every Monday morning, I publish the Gold Report with coverage of gold, silver, bonds, the XAU, HUI, GDX, as well as more than 30 different mining equities. To see for yourself the types of profitable trades that are recommended within the Gold Report, sign up now by visiting TFNN.com. Don't miss out on the next great gold trade. Sign up today.
Introducing Primal Edge.
Today, it's even more important to take a supplement that complements your health. Primal Edge is specifically formulated to boost your immune system and help with weight loss, better sleep, stress reduction, and the need to detox.
Our early ancestors found all their nutritional requirements in the wild environment. But today, our food sources don't contain the vitamins, minerals, and nutrients that we need to stay healthy and strong.
That's why we need Primal Edge Daily Nutrition. It includes a special blend of ionic, soil-based vitamins, minerals, fatty and amino acids in an easy-to-use liquid form.
Primal Edge is powered by highly concentrated humic and fulvic acids, nature's preferred delivery system. They've been called miracle molecules because, like sunlight, air, and water, without them, life cannot exist.
That's right, Ellen. They ensure we receive all the nutrition we need to be healthy and thrive. We take it every morning.
Primal Edge. Just $89 exclusively at TFNN.com.
Don't forget, you can listen to TFNN live on your mobile device 24 hours per day. Go to TFNN.com, then hit Watch Tiger TV. That's TFNN.com, then hit Watch Tiger TV for the latest market information.
Welcome back, folks. So we're going to take a look at the euro US dollar. And so just like the US dollar index that formed a TD9 count bottom, not unusual to see that the euro from the TD9 count high out here. Now, in the case of the euro out here, Justin, what we're looking at is trading really between support and resistance. Support is 1.1663. Resistance is 1.188. So it's really just consolidating. A break of either of those probably sets in motion the direction. We can see we've got lower highs, lower lows, but really more of a consolidation more than anything else with regard to the euro out there. And so I hope that helps you out. And thanks so much for writing in. So we're in our 2-minute wrap out here. Look, I think the most important thing that you can do is looking for signals. Watch that spot volatility index at the end of the trading session. If price closes below that is 2672 or 2678 right now. Sideways to higher would be the message for the ES Mini. If it closes above that, well, then what that signals to you is that the ES Mini should overnight, I would say, get down and test the bottom of that daily profile at the 3456 area. But a close below that, 3456, the ES Mini would be signaling that there is a change in a trend that is underway. And that's really about all. Well, in case the Russell 2000, by the way, I didn't mention that. My apology. It also has a new profile. And currently the bottom of that profile is 1605. So those are the two that would be most likely to test or possibly bust through the bottom of those profiles out there. And so those are the areas to be watching. The other things I'd recommend, I'd say stay tuned for the next couple of hours for 2 more great shows. Your favorite polar bear, he's up next. That's David White. After that, we go to Obi-Wan Kenobi, Tom O'Brien to take us on home. And I'll be, tomorrow morning, tune in from 8 to 9. I'll be recording tomorrow's show from 8 to 9 here live at TFNN.com. Have a wonderful Wednesday, folks. I'll see you tomorrow morning.